Okay, Wednesday, November 9, 2016. A little before the close, going to go over 3 times. I scanned for anything with 3 times in it. I first want to start off with toe stubbing. When you stub your toe as you get older, you have a tendency of not stubbing your toe as much. But in trading, you may be right. But for unforeseen, we'll say that you have VIX type products and you have to wait till the market opens in the morning. Okay. Over my many decades of speculating, I eventually found the currency markets. One, they're open all the time, basically. Okay. So it's like trying to get out. If you need to get out at some time in something, market access, the liquidity, what you're looking for. And I naturally gravitated towards the currencies. Decent leverage if you know how to manage it. Depending upon your strategy, if you just want to take a little bit a day, take your 10 pips a day or whatever and walk away and just come back and have it, accumulate over time that way. That's basically what I do. As you get older, you're not as eager to start trading on Sunday night. I used to go into the office on Sunday for the Japanese yen. Sunday is kind of a nice one because whatever happened from Friday on. And Friday, they always bury some sort of news just to get rid of it. Humans have a tendency to forget the weekend. So what did we have? We had the swoon. We hit limit down. It's been a while since we've done that. Reverses on currencies on the way down and then back up. Okay. So there's been a lot of volatility over the last, not even 24 hours. Okay. So what I'm getting at is that some emails that are written to me are kind of pressing about, what to chase after now. And if markets go sideways 80% of the time, I would prefer, since Friday's a bank holiday and things are going to be quiet, I think we have a wide range for a lot of things, and I think things are going to tone down. So the strategies would be here is if you had something like, say, you're long a stock, you could write calls against it. You're looking at decay with a lot of volatility, option premiums pick up. It was a hard drop overnight in the futures, okay, and the currencies, and we saw with what happened in gold and stuff. What happens when you have volatility like this is it cleans up both sides. I posted on Stock Twits in the waterfall, to kind of go against the grain, but that's what I saw. It didn't make sense what would be in the news or whatever, but that's what I saw. And that's, kind of like the Lab U. When I was looking for a bounce, I didn't know if Hillary or Donald would benefit. All I knew that the market was susceptible to a bounce. It's afterwards, it's like, oh, okay, so the 26 to 42, whatever, that was because of an election. Well, you're still back to, having to move the underlying. Okay. So that being said, let me take a look here. What am I looking for? I'll do this real quick. All right, so we'll just look at our pink dots real quick. Okay. So we have our little pink dots. This is the summation index. This is issues advancing and declining, okay? So these weren't susceptible to a washout overnight, though IBM is traded on more than one exchange, okay? A lot of these bigger issues are traded worldwide on different exchanges. Just like Unilever maybe here in America, but its home base is in Europe, that kind of thing. British Petroleum, things of that nature. So a lot of these are traded on foreign exchanges. So the washout here, you didn't really see it, where there was, we'll say, a lot of selling, basically making a bottom. Okay, so now today we have a pretty healthy reversal. Okay, there was the gap move on Monday. Think about this one now. Friday we closed at the lows. We get the gap. Okay. We looked at the put-call ratio was at an extreme. S&P's closed at, 2080. We bounced up pretty decent, and I was looking on Wednesday for an update like this, then too short. Okay. The election comes in, but with what happened overnight, whatever was down there, okay, for the futures traders, good or bad or indifferent, I always use 24-hour data. This is just the cash indexes, so whatever happens in America. But with what we have going on now, the bias would be that a lot of these issues would be purchased going into the end of the year, because relatively they've been sold off, so like we saw with the minus 75% scan, and stocks that were actually down on that Monday when the market was gapped up and went higher. Okay, and that was with the Hillary thing. All right, like I'll reiterate again, when you get that type of volatility, you clean up both sides, because somebody, I'm not going to go into it, but it may have been painful for some. Some may have been lucky. I mean, 2 days ago, talked about the metals, like gold being a bear flag, up $50. That's interesting, and then down. So what I would like to see, I know that, tomorrow's Thursday and then there's Friday, is I'd basically like to see that you don't press anything unless you do see an opportunity. Mine is, it's kind of more of a caution. If you're in something and it's moving up, just stay with it. Am I looking for a hard sell-off from here? No, not really, because we had that overnight. So we basically have a large, wide range. And usually what happens there is you get a period of sideways. You have, hard volatility, and then it usually goes sideways. The whole, president-elect, that's not going to happen until next year. Then you have budgets. In theory, we are working on the upside of a real estate cycle, right? So this kind of benefits that area, which is fine. To me, he fits the mantra of where we are in the cycle, and that's what he's good at, per se, basically building and things of that nature. So he'd probably be a little more willing to have loose money flow through the system. Now we can go talk about loose money. Well, loose money, in 6, 8, 12 hours ago, they talked about, an interest rate hike in December not showing up, but yet we have bonds that were up to, then down to, kind of thing. No matter what, as we continue to raise interest rates, all right, eventually we'll jam the stock market. All right. So as of for now, tomorrow's Thursday. It's basically a full day before Friday's Veterans Day, and then. But what I would like to see is it would probably be more of writing options and working on the decay than actually going in and speculating on these. Usually when I show up on Wednesday, Thursday, I want to buy, 10-cent calls, 10-cent puts, because I know that they can go to zero, right? And that's where I come in. Most of the time I like to if someone's willing to pay me $1 in a stock, 15% above where it's at, I'll take it. Let's just put things in perspective here. The best hedge fund manager, consistent for decades, does about 3% a month. I know it's a shock that if you do 3.1% a month, that you'd be the bestest guy on the planet or gal. But that's where it's at. There are a lot of days. How about this one? I talked about 3% a month. Well, what happens if you do 3% a week? Compounding, like with the currency thing. But you just have to have a plan. Like I said, running around and chasing after this, that, and the other thing only makes the broker richer, you more, frazzled. And in my case, I get what I want. Everything unwinds, right? I come in at the lows, reverse, and then wake up this morning and we're basically back and or above where we were at, say, like last week. So we're sort of back in the sideways channel again with equities. But with that said, when you have a lot of volatility, usually you pause. So I would prefer folks, not to press their luck for Thursday, Friday, unless they're going to write options and collect the premium for right now, because some of these moves in the currencies, even at 50 to 1 leverage, it was hundreds of percent on the way down and hundreds of percent on the way up. So for me, that kind of thing is, I stand back. They call it a hot hand. It's kind of like sports betting. You don't know that the guy's going to be a 16-2 pitcher until you start seeing 6, 8 in a row, and then you get on board, and that's known as a hot hand. Basketball players, I bet on this guy, he can't hit a free throw, and then all of a sudden, boom, 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 he hits 19 in a row. That's known as a hot hand. Or you hit 0 on the roulette wheel, and you think 20 times in a row, and you think 0 is going to pop up again. That's a gambler's fallacy. So there are a lot of, I think there's 9 or 10 flaws in humans that people can exploit: vanity, pride, the greed, and a few others. And as a trader, you begin to learn that cognitive say if the chart's going up and you think it's going to go down, we're going to have a lot of that now, okay? Because half the country is buying the market today because their person won, and the other half is shocked but came back up and like, okay, well, maybe whatever. Cognitive dissonance. All right, so coming from a guy who stubbed his toe, all kind of, you name it, 1987, I'm 19 years old, the stock market crashes, when do options expire? There's a lot of things that pop up that you plan for. I planned for something for after pre-Brexit, to be careful. We get a swoon, it comes back up. I say you're on your own. We get a swoon here, we're back to where we're at. All right. Now we'll talk about Santa Claus rally, whatever they're going to try to use to bid this thing up. But looking at the bigger picture here, once again, New York Stock Exchange peaked in 2015. You have a peak here, July-August period, and then it drops off. We should continue on, at least pause or continue on, and relieve the pink dots, the bottom fishers, people that are like, hey, this stock is 70-80% off. I wrote about VRX today, that it could be like an exhaustion gap. I wrote it down as an island, just in case tomorrow morning it opens up higher, that kind of thing. And it leaves a gap that way, then it'd be an island. It's in theory, it's an exhaustion gap. I kind of look at it. There's a breakaway gap, a measuring gap, and then an exhaustion gap. But I wrote it as an island, assuming that VRX will gap higher tomorrow. But I throw these things out there from what I see. I don't have, most of the stuff that I trade is basically currencies. It's liquid. They're oddball stuff. The leverage is there. I go in for X amount of whatever and I'm gone. You know, to me, when I started doing this, when I was following the markets when I was like 9, I didn't have the patience for a whole year to make 6% or 8%, but that was the going deal. That, you know, you had to find something. And for me, it's mostly psychology. And the psychology says that a lot of people have, a lot of the damage that's been done is not as much as it's kind of like when we were limit down on equities, we're also up $50 in gold, and VIX was screaming, and everyone said, gosh, I wish the market was open so I could get out. You know, and some people had puts. They may have, you know, stayed up late, had a, you know, a lot of lessons, write them down, you know, but there's going to be more to, you know, eventually, you know, the stock market will run into the headwinds of higher rates and it'll roll over naturally into a recession. And then we should carry on one more leg for real estate past that. So I'm looking for one more recession in between the real estate peak over the next 8 years or so. So it's just, I would prefer people just to stand aside. I'm going to stand aside and just give me time, you know, to kind of, because you got everything you wanted. You know, do I buy into gold now? Do I short gold? Do I buy dollars? You know, that kind of thing. But going back here, where are we? These guys? Okay, so we're just going to look through this real quick. Daily, well, it doesn't have what gold did on the way up and then back down, but basically it's the same thing. You know, to me, it looks like a bear flag, you know. Can there be inflation with it? That's fine. Spin it that way. You know, we had the dollar swoon and run up in gold, and then everything reversed. Okay, so even though we know that things are going to be inflationary, that's just what it is. Everything gets sold off after 2011 high in commodities. Everything bottoms, and then there's just a natural uptick in inflation along with wages. So, you know, I like the short-sighted metal, just looking forward, because what happens? Interest rates go higher. The cost of carry, you know, if you buy the gold, that's there. Just draw on a trend line here from the beginning of the year. It broke it, right? So then we have a dip. Maybe it's a longer sideways pattern and trading lower. Okay, it's lost its momentum. Like I said, I'm more than happy to take 80% of what my target was for metals this year and stand aside because I'm looking for opportunities in lows and highs. Same thing here's with the miners. So I'd be more interested in looking at, you know, your dust and JDST because of a lot of those will go to zero. You know, that's just how it is. You have everybody piles into drilling and mining and things of that nature, and you have too many companies and they're fighting over X amount, and you don't hear about silver, you know, that you can't stock it on the shelves kind of thing. Bouncing oil, go along with the Canadian dollar I was talking about. And I posted this morning about 46, 47. Got a little bit of a bounce, longer sideways seasonally this time of the year. You know, here's a range. We'll say $30 to $17. Basically, you know, sideways. I'm trying to target 22 area is basically how I'd look at it. But for me, I'd stand aside. It's not like fishing off the bottom down here. Because that's how I look, and then I listen. You know, if everybody's things are beginning to be at an extreme, commitment to traders reports for futures and that. The thing about futures that I like is that they don't go to zero, right? A lot of these equities go to zero. I don't get caught up in the hype. I don't make excuses. I just look at the chart. You know, I don't have time to read. I try not to layer things on like, well, if you do Trump, then you need to do this and you need to do that. You know, that's like a parlay thing, I guess. You know, parlay for baseball or football. You know, this team and that team and this team. So you have 3 legs. What's that? 2 times 2 times 2. That should pay 8 to 1, and I think it pays 6 to 1. You know, it just doesn't work for me. You know, Here's with the D gas. You have a fat outside bar. It poked through dailies. Yeah, these are dailies. So it poked through, opened at the high, and came back down. It's 88 here today, I think. I'm in swimsuit, I'm sweating, so again, air conditioning, so at least larger here, sideways on the D-gas. The winter has to develop, that kind of thing. My stance on natural gas is that down, sideways to down, I'm willing to nibble on it. I was looking for maybe around 220 or so. 20, what did I write about? 206, 216. So I think 216 or that for the next point of control. POC, the happy area, it was minor. I actually bought gas, GAZ, just due to the fact of it's pennies kind of thing. If GAZ goes away, UGAS and all these others, they're just, the brokerage firms, the underwriters of these things have threshold limits and that. So I kind of just stuck my nose in there, keep an eye on it and that. So it's one of these, you buy it at 40 cents and sell it at 60 cents, that kind of thing. It was one of those where I didn't want to fish for the decay. Flipping back. I mean, if I'm going to play these leveraged things, but I'm really not 100% interested until after a crappy winter. You know what I'm saying? Where the setup's there. People are willing to unload these things at lows. Then I'd be interested in buying. But for the sideways chop with these leveraged things, just too much chewing up. But the gas thing kind of works. Okay, so you have fat bars here. So on this one, this is a bear SPX. So you have fat bars. So basically all the people that bought into it into Friday, and then a lot of selling going off here. So in theory, what I would do is, what's this, 1108 or 1181. Ding, ding, ding. That's where I'd begin to take a look. I'd have to say probably next week, Monday, Tuesday kind of thing. See if we're down into this area, and see about a reversal, because what do we know? We dropped, then we dropped hard. That didn't show up here on the chart, and then we're running the other way. So there's a lot of whipsaw just in this week alone, and we still have more time. Okay. It's not that I'm not as eager to short hard now because of what happened yesterday, or last night. But it comes down to if they give up, and you can see it kind of just the give up here with the wider bar. That's kind of how I look at it, where all of a sudden it just kind of trails. I just watch it in the background, because you never know. All of a sudden things change. Little things come to light. Whatever. Even though we had a 1-day deal with an election, it doesn't mean that it's changed. So I'd be interested in watching these things like S2. We get a carry through on the upper range of the S&P, but just to watch it. For what I see with the little pink dots. The market is susceptible to a continuation pattern higher. All right, so every day that we mark and go by, all of a sudden we run into, oh, look, the shopping season is pretty awesome. And the market continues higher. And then my targets are, what was it, 2,200 and 2,350, that kind of thing. But after last night's move and this morning, we're going to say that little low is put in there. It should be good for a while. Here is dust, opens at the low and trades higher. Okay, basically the same thing. Because you're not getting the trend, things are a little more difficult, and that's why I said kind of stand aside. Here you have your financials butt breaking out. interest rates are moving higher, their margins, ta-da, and we have a guy that's loves the real estate. We're in the upswing in the real estate cycle. You know, he's going to be his own little cheerleader for all of this. The other thing too is usually when you see a breakout, you want to see it heavy volume, but you just want to be careful here that it doesn't come back through. But I'm gonna assume that we're going to continue to beat on interest rates here, just due to the fact of it's the nature of the beast. UGAS, pretty good here on engulfing. Okay, below. What do we have? EIA tomorrow. I won't be here for EIA, but I'm going to leave a little more bias on the upside here, kind of like oil, where it opened and then traded higher. I'm going to do the same type of play, just this engulfing bar below here. You know, but on weakness for traders, you know, buy in if it works for you. Put the stops, you know, where you bought in. JDST basically the same thing. It opens at the low, higher fat bar, so you would have a lot of people in here. Higher interest rates, higher dollar. It's going to cost the cost of carry for metals and stuff to rise. LabU, I posted the chart down here for bounce. Got the bounce, heck of a bounce. Nothing like, what was it, 26 to 42 or something. Then I wrote about half back, so it's about halfway here. Basically a lot of volume on the open and then kind of sideways. More than likely what I saw with like IBB and things of that nature will probably have a continuation higher. But it doesn't mean it, just because this happened doesn't mean that people or doctors or HMOs, blah, 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 you know, it all works out that way. Lab D came back down here. I'll pass on that because a lot of these look that way. I mean, you know, gap. No bottom fishing for me down here, even though this is a fat bar and everything. Gap fill and something, I'll pass. To me, there's just too much risk. The TNA, okay, so here we are at the cloud. So the weekend comes around and rolls around. When we come through, then we'll have a little more for an outlook to see how things are shaping up. Transports. You know, see what kind of bounce we got over the weekend. Is it broad base? Is it narrow base? Are we all just bidding up retailers, things of that nature? There needs to be this type of pattern. It's usually a springboard and you go higher. They are mentioned inflationary, and that's typically good because on the short run they can charge more. Okay, but on the long run, interest rates pinch. Like it's like raising prices quarter over quarter over quarter. It's, you know, you say you're at $1.39, then $1.59, $1.79, $1.99, that kind of thing. Well, your return begins to drop. Okay, and then interest rates are rising, so your margins are pinched. Same thing. So it's kind of like, you know, here we are at the top of the cloud. This should be a swing pattern, pretty decent volume. Overnight, you know, cleaned out anything that was underneath. So naturally, if you bust through, say, a larger pattern here, usually you continue on. Remember, I talked about S2 to R2. These are next year's, but I guess this was S1. Now we're at R1. There's pivot. So here's R2. So it's the same type of deal that force people to chase after these things. Oil, longer sideways. I mentioned before when these were all at $200, just short them. They never last. They're designed to fail. You know, unless you have a trend, the chop will just eat it alive. Fast, same thing. You know, obviously it's not working here. Yin and yang. So here's China. But this one doesn't really have a very good setup here. This was the move. Remember, I think we talked about copper in China. That was the move, and we had this. So we need to see what kind of follow through we have in Asia and that. This was interesting here. See, okay. Well, I suppose these all traded before we got here, so you'll have to give them another day. You have to give candles and stuff a couple of days here. See if this one just settles back in tomorrow. Because you may end up with, there may be more people that think like moi that need to take a little bit of a break. Here's energy bull, larger sideways pattern. A bump in oil here should help to press this higher. Energy bear, just like it was rolling over with, what was that, FAS? Where am I here? FAS, same type of deal, rolling over. Yeah, where was it? Right there, FAS, same type of thing. Lower interest rate one, we're up to 21 a change, pretty fat. And this is, usually this one has a little bit of a pause. You're back at the middle of this area, like a lot of them, like opened at the high kind of, and then just traded sideways majority of the day. What do we know? We know a lot of people are in here that bought here. So me as a floor guy, I'd want to pressure this down here to see if I get any people to sell. Because we know that eventually, interest rates will continue on higher until it jams the economy. Long on the same thing. We poked our head through. I think I wrote about SPX. What was it? 2163. If it continues on, that's fine. I don't have a problem there. Not a problem. Because what you'll have is, because the whole put call ratio that I talked about over the weekend, and the huge swoon in the futures market for those of us who could take advantage of it. And then the reverse, I talked about one stay in Sania. Just made it up as I go along. Here we are. You can hand Kevin the ball and tell him to continue running. Here was S2, S1 pivot, R1, no, R2. So on this one here, you're shooting for 100 at 96. It's $4. Have at it, kind of thing. Here's $8, I guess, to R2 for December. Okay. A lot of these look like they're going to continue on higher here. So much for my swoon, huh? But we shall see and never know. You gold. I was in this one, actually. I was one of those people last night that went, hey, I have VXX in the futures and, UVX. Why would I splash stuff on the screen just so when somebody, I keep an eye on it, because what happens is there's the equity du jour or the East ETN, that kind of thing. So I have to keep an eye on stuff. And so I had this U gold on here. And overnight, it would have been nice to be able to pitch when gold was up, that kind of thing. Same thing with silver here long. It just looks like a bear type deal. Because what it is after half the country gets over their anger on the election or frustration or however they see it out of their eyes on this here, then they'll begin to shapen up and kind of go along with it if it helps them or not. What government is all about? Benefiting who do I benefit? Here's SOX S. This is kind of interesting with a lot of volume here. Gonna have to keep an eye on this one here. You figure this one would get cleaned up a little bit, right? Semiconductor shorts. And now here, emerging markets, so this one pull back. So this one you need to, oh yes, with the Mexican peso and Brazil and stuff, you may get the emerging markets to falter. Where the money doesn't go overseas, it comes back domestically. Yang, bear China. We need to watch Asia. Yeah, this one will keep falling. Here, a lot of these, I mean, this is kind of bear market behavior, short, sharp, and quick. Bing, we'll know tomorrow morning if there's any continuation on here. If R2 is up here with here at 32. Russ, All right, so this one is going to be coming back with oil. I'd probably watch this one just due to the fact of it's Russia and oil, 90 gas, whatever. If something doesn't work out there, they have their own bills to pay and things too. They are coming out of recession. How do you know they can't double dip? Blah, blah, blah. SOX L. All right, so you're just jammed back in here. Okay, so yeah, so a lot of these here, you know, it may seem like, oh yeah, we have a full reversal here. Not so much. Drip. Looks like that's going to continue lower. Like this, I mean, you know, open at the highest, you know, or where are we here? Yeah, open at the highest, close at the lows. This is the short side, but it's still, you know, it still hasn't any of the damage down here. Brazil U, I'd take the short side on this. These are daily, right? Yeah. Let's sit there a second here. Yeah, Brazil with the currencies. Yeah, I would kind of fade any type of rally in the emerging markets. Why? Because of higher interest rates. You know, if they want to participate here, they're going to have to pay up. Gosh, I'll pass on that one. This one here, Tech L, NASDAQ here. I'm going to have to keep an eye on NASDAQ. Yeah, we could have a shoulder head and a shoulder here. Because you have what did we know with a fat bar like this? It opened here and closed here, and there's a lot of bodies. So he's a floor guy. I don't want to press this lower range here. What is it about? We'll say a little under 45. Gas L, that should stall somewhere in here. Yeah, the more I look at these, real estate bull, that kind of pattern usually signifies a low. But they talk about higher rates. Well, you get the higher rates when, you know, if interest rates go up to say 5%, but your homes are doing 7 to 9% a year, it's still borrow the money. You know, here's the, you know, lend me, you know, lend me the cash. Let me build this thing. It works. You know, 5, you know, whatever. I don't know. I'm not a construction guy, but just a mathematics. You know, 5% for a year, whatever. 7% annual on the home. It's increasing while you're building it. Here's a stall here with the Russia. Real estate bear. That looks like a stall too. Down on the silver. Okay. That one was a good one. Opened up nicely at S1. Traded up to pivot. I can see it swinging higher and up to the 30s here. This one here just has that look to it, right? Breaks on through, comes back, opens here, trades higher. And I think things are going to thin out here because I think I sorted them by volume. Tex S, that one's stalled too. Yeah, it's the next 48 hours of trade going to be real interesting here. Down gold, that one paused. That's the pauser too. Yeah, we're going to need some follow through here in a few of these here. That one's stalling in the center. Yeah, that one brings us into late next week for the mid caps if we don't get any follow through. India bull traded up, so we assume we're going to see a higher nifty kind of thing in India overnight. Euro bull kind of thing there too. Yeah, okay. So these are beginning to thin out. 42,000 in volume retail. Retail is a bounce here. Okay, so that's what they went after today for retail. But that's awful. That's a pretty deep pullback here. Yeah, the cost to carry for product here. That's a Korea. That didn't get any follow through. Wow, we kind of have things a little mixed here. Japan. See, these trade in America, so one assumes that America's upward bias would float into these, and it didn't show. We're gonna run through these real quick. I'll let you go, and then I'll switch over to the futures. Bear market US, pull back here, and then higher. 24 3/4, and then shot at 30. So that means that America's going to go, or yeah, developed, right? Developed is going to go lower. 7 to 10 year higher. Yeah, they all did. Okay, so the obvious point here is that we can beat on interest rates something fierce. You know, that's basically how we look. You know, Donald's not going to give up on this thing, even though real estate's cost him 4 bankruptcies. Whatever, you know, that's fine. But you know your enemy. Sun Tzu. Oh, this is a fat one. Home builders. Yes, I am running to Valspar. Where am I running to? I have to get a bucket of paint. Therapy for Kevin. Bucket of paint. Sick. Yeah, it looks pretty sick. Oh, this one looks like it's going to fall over. Latin America Bull. Okay, here's a short for you. LBJ. Oh, the irony. LBJ, this one looks like a short here. Short it. Better save that one. LBJ. I think I went after it a few times. I think it's just because it's at, oops, I had $100 or something. Yeah, this one looks like a shoulder, kind of choppy head, maybe shoulder, and then roll over. Oh, look at this one. Regional. Everybody's in regional banks. Everyone got out. Everyone got in. Oh, whopping 7,300 of them. Volume. All right, a little thin. And we'll skip it. All right, so I'm going to let you go, and then I come back here. I'll do one on futures. All right.